How often you check your portfolio and consider making changes depends on how much time you are prepared to devote to investing. For most, it is sensible to review a portfolio once or twice a year. If you tinker with a portfolio on a daily, weekly or monthly basis, you run the risk of making unnecessary changes and doing more damage than good. If you buy and hold for years, you can end up with some funds that are no longer managed by the same fund manager that you initially invested with. In addition, if you don't carry out a yearly review of a portfolio, you can end up taking on more risk than you wanted to. An important part of a review is to rebalance holdings. This involves taking a look at your winners and converting some of those paper gains into real profits. Some of the proceeds could then be reinvested into areas of the portfolio that have been underperforming but may soon recover their poise. For example, let's consider the two major asset classes, equities and bonds. Over the long run, equities tend to outperform bonds. If the portfolio is not rebalanced for several years, the equities weighting is likely to rise, potentially to a level that an investor is not comfortable with. It could turn a low-risk portfolio into a medium risk or a higher risk portfolio. There's always a risk of taking profits from a star performer too soon, particularly when it's significantly outperforming everything else. But as the percentage weighting of the holding increases in the portfolio, so too does the risk level of your portfolio.